And we're back. Greetings and salutations. This is Neal Isaacs, the Raleigh business broker, and I'm really excited to be joined with Charles Calloway, who I will introduce momentarily. For those of you who have watched my content before, you know that I like to talk about all things small business transactions. I like to create content for business owners, business buyers, business advisors to serve those different groups. So that's what we're going to be doing today. And instead of just talking to you, the audience, I'm going to talk to Charles, because Charles is a fellow advisor. I've known Charles for probably a decade or so. I really, really like Charles. Sharp guy, nice guy, very approachable guy, well-experienced guy. Charles has over 3 decades of experience as a financial advisor. And that was after he came out of the Air Force. He was an inventory logistics manager when he served our country with the Air Force. But he's been serving individuals and business owners with their financial needs ever since then, primarily through being a registered agent with Primerica. In fact, he's an agency owner with Primerica. So with that, I want to welcome you, Charles, to my YouTube video here. How are you today, sir?
I'm doing great, Neal Isaacs. I feel I'm honored to be here, man. You're so popular in our community, you know.
Well, I don't know about that. I know I like to talk, and I'm glad that people listen, and I'm glad to share this with you.
Right.
And we did a little bit of conversation before this about what we want to cover, and I think the overarching theme for our conversation today is going to be long-term planning, managing risk, the challenges that owners, whether they're just individuals or business owners, like they have different choices, they have different strategies, and how can you and folks in your position kind of help people with them. And then for me, when I'm talking with a business owner, where do our worlds collide when owners are planning for their future? So I think that's kind of where we're going to go with this conversation.
Okay.
So before I go on, is there anything that you'd like to add? I gave you an introduction. I kind of probably botched it. Is there anything else you'd like to add just about in general about you?
Well, my story is a short book, but no, I just love the work I do. I just love seeing people get it and apply things that maybe we're fortunate enough to teach them. You know, the bottom line, Neal, you know, people think about money like all the time, okay? And it is not necessarily because they're greedy or obsessed with it. You know, there are those people as well. But it's because it touches every area of our lives. And when you talk to small business owners, which you and I are both passionate about, they want to be clear. They want to be clear financially on what the next best step is.
Yeah.
And there's obstacles to that, man. You know, there's obstacles. You know, one is overwhelm. There's so much information coming at us. It's like taking a sip out of a fire hose sometimes. Yeah. And then sometimes it's just a matter of confusion, you know, like, you know, what's the difference between this type of retirement account and this retirement, and which is best for me, and how does this apply to me? And so really what we're all about is helping small business owners, clients get a clear financial vision. You know, what is the next best step, you know, and so we love it. We kind of feel like we get the front row seat of people's journey, you know?
Yeah.
So
I love that. Thanks for kind of that introduction. And it kind of reminded me of something I say a lot is you know, I like to stay in my lane as far as selling. We value and sell people's businesses. We don't give financial advice. We know that there are a million different options for what to do with their money. And we're not the best ones to advise them on that because there is so much noise, as you're saying. So I like when people work with somebody and kind of entrust somebody and let them be guided down that path to what's the best solution for them. I think that's a great kind of way to get started. Well, I want to learn more about your clients. I kind of put them in these boxes of business owner, individuals, but talk to me about a typical client for you and kind of what they're thinking about, what they're worried about. Let's start there.
So, we have hundreds of clients, okay, but probably a big part of my clients are either clients that either they're in corporate America thinking about starting a business, or they're have a side hustle, so to speak, building a business. It's an incubation stage, or they may have a business, but as you know, there's a big difference between owning a business and owning a job. And they're solopreneurs, in other words, and they're thinking about taking that next step of how do I transition to this where I'm working on my business instead of just in my business. And then there are those who have matured where they're thinking where, how do I down ramp? How do I off ramp on this? And that's when we engage with professionals like you and put you together with them and say, how do we evaluate this? How do we get out? Should we pass it on to our children? Should we just posture it to sell it? What should we do? So we have clients, fortunately, in each of those different stages. And so I hope that answers your question.
It does. And I think that's an important point, that people change. People's needs change as their age changes, as their business gets bigger or smaller. And we're going to get into strategies and tools here. And those, what works now, maybe you have to pull out a different tool from the tool belt as those things change. So, well, good. Well, when I asked what they're worried about, I'm curious, do you ever see people worried about something and then you hear their current situation and you're like, well, you should be worried about other things? Do you ever see that? Let's talk about that.
That's a good question. Of course, a lot of business owners, they're really worried. They want that next client. They want to get more revenue in the door. They're trying to get more business. And so a lot of times they're preoccupied with that. And I call that tactical thinking instead of thinking strategically. Okay. In other words, they lose sight of the forest, focused on the trees. And so oftentimes that's the kind of conversation. It's like, how do we get them to think bigger picture instead of thinking, just what's how do I get the next customer? That's a very popular one. Another one is when they're trying to start the business. Again, they're thinking about things like, what kind of chair I want to have, the desk, the office. And they're not. We need to think about how you're going to get the first customer, which is kind of like, okay. We've all seen people that come out of corporate America and they think what they need to do is throw a lot of money at putting all this infrastructure in place, which is basically cosmetics, as you and I know. Instead of focusing on, okay, how do I, niche and identify and start to satisfy the need of my first customer? That's the most important thing. So, okay,
that makes perfect sense. And you might have a great desk, but if you don't have any customers, then you can do that.
That's right.
And I mentioned you've been doing this for a long time. Talk to me about kind of how's the game changed, the financial advisory game changed in the 3 decades that you've been doing it?
Well, that's an interesting question. I think about that. When I first came into business, I think the value proposition that we made to the consumer was the same but different. And this is what I mean by that. Early on, when I came in, you understand, when I started, there was no such thing as the proliferation of the internet, okay? Access to information. So my value proposition, a lot of it was framed around, I have access to information you don't have access to. Therefore, you need to use me. That was my value proposition. Now it's more, you can get the information. You can get free, if you know how to Google search something, you can get more than enough information. But now it's overwhelmed because it's so much, it's like taking a sip out of a fire hose that I mentioned earlier. There's so much information coming. You're like, okay, which of this data applies to me? Which of it doesn't? Which is superfluous? What is false? Okay, what is true? And so now the level of awareness is still low,
Yeah.
because of lack of information, but it's from a different place. One is I don't have access to the information. Now I have access to too much information.
We see
I
the
think
same
that's a
thing
big
in
difference.
we see the same thing in our field. I mean, as an example is people want to know what their business is worth. They can Google multiple of EBITDA, and they could probably find the multiple of EBITDA. Well, what's the EBITDA? How do you calculate that? And is it different for different times or regions? Or yeah, it's a great point. It's a different problem that have scarcity of information versus an overabundance of information. Either way, you need an advisor to guide you through that.
Yeah, yeah. I think you said a key word there, Neil, is guide. You know, one of the things I've come to realize is that, you know, my clients aren't looking for a hero. They're the hero. They're just looking for someone that they can trust that will guide them, you know? Yeah. So, yeah.
Well, let's stay on that topic. I want to kind of focus on risk.
Okay, risk.
Every day I'm talking about risk with buyers, with owners. It comes into every offer. You know, the owner wants this much, and the buyer says, "Well, there's this much risk, so I'm not going to, you know, if I give him the money, I might not get it back. How do I know I'm going to get the return?" So that's kind of how I see risk in valuation and in our day-to-day life as an intermediary. But I'm curious about how you approach risk from investment strategies and specific to small business owners. When you're talking with owners and you're talking about risk, like what could go wrong and how can we have a plan to protect you from that?
Right, right. So, okay, that's a broad word. So let's start with, I'm gonna break that into two parts. Okay, risk from the standpoint of their particular business, and then risk in terms of their portfolio that they should have. Okay.
Yeah.
By the way, a lot of business owners, one of their big risks is they put all their assets into their business and they don't do the things on the side with an investment portfolio at the same time. They're not doing both. And so it's like all their eggs are in, I'm going to build this business and then I'm going to sell it one day, which is great. But one of the ways, fundamentals of risk is you don't put all your eggs in the same basket, you know? So you need to be saving money. We need to have resources that are outside of just the business. Okay. But anyways, that being said, give you a couple examples of a young man. He started by working for this company, and now he transitioned to actually owning the company. And so one of the things, but he couldn't like put the money up front to do it. He needed to get a loan. Okay. And so one of the things that was very important for him to do is to make sure he had, you know, adequate life insurance in place and make the people loaning the money to him the beneficiary while he was paying off the loan. So that's one way you transfer risk, by buying the proper products, you know, life insurance, property casualty, things like that. So if the catastrophic happens, it doesn't wipe everything out for your family and set your family back a generation. So that's one conversation.
That's a great example.
Sir?
That's a great example. These are the type of tactics I'm talking about when we talk about managing risk with strategy. Continue.
Yeah, exactly. So we just did one last month where, you know, this person, you know, he had to basically take out a $2 million loan, okay, from the people he was purchasing it from. And these are people that actually he's buying it. These are people that he was working for before. Yeah. And so they required him to get the life insurance. So, but the thing is, you know, one of the ways we approach that is how can we minimize the cost for that, and while at the same time, you know, provide the protection, you know, and that sort of thing. So we put that together for him. Okay. Yeah. As far as managing risk from a standpoint of their portfolio and everything, well, you know, there's classic what we call asset allocation. So again, you know, for years and years, people would invest in particular types of investment, and they tend to chase returns. They tend to chase what is hot and what's flashy, which, you know, the sparkly objects, instead of focusing on kind of the mainstay type investments, and making sure that you have it diversified, and you have asset allocation put in place, and then you rebalance it over time. And so that's what we spend a lot of our time doing. is making sure that they have a right combination of types of investments so that at any given time they have parts of their portfolio that's doing particularly well.
Yeah.
Then you may have some parts that aren't doing well, but it balances it out so that the bounciness, the volatility isn't as great as it would have been if you were trying to chase the next hot thing.
Yeah. By the way, business brokers talk about asset allocation, talking about something totally different. We're talking about asset allocation purchase price.
Okay.
So it's going back to how advisors can kind of highlight certain aspects of the journey. It's interesting to hear you say that because we mean something totally different. But I hear what you're saying about balancing risk and how financial advisors can kind of bring in these tools to implement these strategies to de-risk certain potentially disastrous circumstances. I think that's exactly what it's all about. So thanks for kind of sharing that. And I want to continue on this conversation of I call it de-risking. What are some other financial strategies? You mentioned a really important one is not putting all your eggs in one basket. I get referred business owners all the time, and they think their business is worth more than it is. And their financial advisor is saying they think they're going to get $10 million for this business. And if that's true, that's great. But they don't have a lot of other savings, right? So I'm curious if there are, especially on the tax side, other strategies that you work with business owners on to kind of de-risk their portfolio and just kind of protect them from the worst, with the future being unknown.
Yeah. So I'm trying to track with you as it relates to that. I think a lot of that I would defer to a person that does what you do. Okay, what are some things that would make this business more valuable? Like, it happens even in my work. There are people that sell their practices. Okay, a little bit different, but the same as well. And so one of the things that a lot of my colleagues do when they retire and they want to sell their practice, for example, they'll do a contract where the person pays over a certain amount of time instead of getting a lump sum, because how they receive that money when they sell it is going to affect how they're taxed.
Absolutely.
So that's why it's important to get a tax professional involved as well. It's a big difference between being taxed, when you get a big lump sum versus if it's spread out, whether it's income or capital gain, that kind of thing.
And we're in the same boat. We have owners that will ask me, hey, how much is it going to cost me in taxes? And I say the same thing. I can't give you tax advice. I'm not a CPA, but let's explore how these different deal structures, which is what you just articulated. Most owners, when they hear sell their business, they say, here's the keys, here's the cash, we're just going to do an equal exchange, we're done. In reality, you see a lot of more complicated deal structures with some cash down or majority of cash down and payments over time. Back to risk, buyers like to make offers with payments over time because it de-risks it for them. But there are tax implications, and we give the same advice. Talk with your accountant. Sometimes it's more advantageous to take payments over time. Kind of depends back to their stage of the journey that they're in.
Yeah. I think also clients that are solopreneurs, they're trying to. A lot of times they go through a period of time where they're so focused on lowering their taxes that they don't. They write everything off in the kitchen sink, And so then when it comes time to get more, they need more operating capital, borrow money and things like that. They can't really show it. And so, again, that's what a tax person does.
I'm so glad you went there, and I'm bringing it back to you, Charles, because when I see that, my answer is always, I know you make a lot of money, but I can't prove it from reading your financial statements. You bury it in the cost of goods sold. There are ways to do this, mitigate taxes, where the business intermediary or the banker, can find the cash flow, even if it's not on the bottom line. And the right, again, I'm not giving tax advice, but there are better places to put owner benefit. And what I've seen from talking with CPAs and accountants is it's a lot of retirement, pension activity, employee benefits. These are all some employee. If you're an employee of your company, you can benefit through employee benefits. This is where we like to find expenses, and we can add back and show the next owner, yes, this business does make money. And this is kind of throwing money into the future for the business owner, right? They're still getting the appreciation, the benefit of their hard work, but now it's more bankable. That's where I refer to financial advisors to help with that. Do you see that?
I do. And one of the things, I think this is tangential what you're saying, but you're talking about diversifying risk and everything.
Yeah.
You have this situation a lot where you have someone that may be in their mid to late 50s. They've been in business for a while. They have younger employees. Their team may be made up. The oldest is like 35, 25, 30. One of the strategies we put together is how can this business owner that has done like most pour all their money into their business and really haven't put money away for retirement, how can we do two things? One, help them catch up, so to speak, on their retirement.
Yeah.
And at the same time, reward their employees through benefits.
Yeah.
Without busting the bank,
Yeah.
And so we put strategies together like that, cash balance plans, 401k plans, things like that, to help them, where maybe they could put away, $50,000, $60,000 a year now to try to catch up.
Yeah.
At the same time, be generous, relatively speaking, to the employees. And I think both of those will show. All those will show on their financial statements, which would still make it very sellable because the cash flow came, right?
It all comes down to cash flow. And by the way, what you just mentioned, we were talking about financial tools and tactics, but what you just shared is a strategy for retention of talent, which is the number one. The labor shortage, attracting people and keeping people, is the Market Pulse survey just came out. It's still in the top 2 of reasons why people are having a hard time with businesses. They can't find talent. They can't retain talent. They can't. And so offering benefits, and it can help you in multiple ways.
Yeah. Nothing. When it comes to benefits, what I'm experiencing is this. Because I talk to people on both sides, the potential talent pool and the business owner, and I feel the pain because a lot of my clients are small business owners. Is really a lot of it comes down to this. Employees want someone that really cares about them. Okay, that may sound touchy-feely, but people know when you care.
Yeah.
Okay, so you give them benefits, but you don't care. That's not going to work. If you care, you genuinely care, and you have the benefits. Now you have something that's going to work really well.
Yeah.
There's one company, I won't mention their name, where during a major downturn in the market, they had no business, but you know what? They did everything. They kept everyone on payroll. They still punched the clock, and they came in and they may do silly things like paint this, do this, repair this, stuff that really didn't generate any revenue for the company, but he kept them active. He poured into, and employees aren't dumb. They see that. This guy's really. So number one, it showed his financial strength.
Yeah.
Okay, by going through that couple year period of time.
Yeah.
But when the market came back, he was more competitive because he still had his team intact and they were ready to hit the ground. They were ready to move. Whereas his competitors, they laid people off, things like that. Yeah. So it takes some sacrifice or whatever, but I think that's the key.
That sounds like a great business owner, and I bet he or she was probably rewarded with being able to take advantage of the PPP loan and maybe the ERC loan.
Yes.
That's a great story.
Yeah. So it takes a lot, but you're right about the benefits. That incentivizes and keeps people. I just talked to a young lady just Thursday. She called me. She was excited. She took a job with a competitor.
Yeah.
The place that she left, the owners I met her through doing a financial wellness workshop for them,
Yeah.
and she set up some things, but he didn't have as robust of a benefits package.
Right.
Better. So she's excited about moving there.
Yeah.
And so, it's a lose for my client, the business owner, but it was a win for her because she found a competitor that was larger, had more resources. The benefit package was there. So it's, we always hear about, in the real estate market, we have a buyer's market and we have a seller's market. We are in a period of time where we're in can I say, an employees market? It's like the people that show up with a great attitude, willing to work hard, want to learn, have the experience. Yes, they're kind of driving their price a little bit, right?
Yeah.
And of course, the pendulum is going to swing. Most of the time, it's not that way.
And my wife works at a big hospital, and she gets great benefits. And it can be harder for small companies you mentioned competition, to compete with bigger companies for benefits. When I had my small business, this was 15 plus years ago, and I had employees, I was unable to find benefits that made economic sense for me. But I think there's been an advancement. I think that owners have more options to offer benefits, whether it's retirement, healthcare. Healthcare is a different matter. I think there's a big gap there. But especially when it comes to retirement options to offer those as the benefits, I think that's a lot more attainable now than ever for small business owners.
Oh, there's so many things. There are plans that we can set up for people, that we've set up for people where it actually costs the employer nothing.
Yeah.
They can also do things like have workshops for them. Like a person like myself will come in, provide some food for breakfast or lunch, and teach something, to the employees. That's value add, right? Especially if it's legitimate. Or you can have a retirement plan that's a full-fledged bells and whistles. A small employer can have a 401k plan that's just as robust as their competitors now. And it doesn't cost what you may think it costs.
And that's a great segue. I'm going to start to wrap this up. I've got one more question for you that I didn't prep you for, but what you just shared about being an educator, about helping people get better with their money, is something that you're passionate about. And I know that you teach a lot about that. And I'm gonna give you some plugs here in a little bit about how people can dig in and learn more from you. And I think you have a private Facebook group. So stand by for that. But before I give you some plugs, before we kind of bring this home, I'm curious. We talked about, I've seen this working with owners and how they start to change their motivations for saving and transitioning into retirement. We talked about how people are going through different stages. When people are reaching retirement age as business owners and they start to draw Social Security, and I've noticed their incentives start to change with paying themselves salaries. And when you pay yourself a salary, you have to pay all these taxes. And so can you share a little bit about what you've seen when it comes to how incentives for business owners change as they themselves reach retirement age for their businesses specifically?
Okay, so there's a lot in there, but so these people, how old are they, Neal? What are you thinking? Are they in
the age where they may want to start taking Social Security benefits?
Right. So first of all, the thing what we do there is we want them to realize the full breadth of their options. Okay. So when you take Social Security is going to drive how much it's going to be for the rest of your life.
Yeah.
Okay. And of course, the rest of your life is this big unknown. We don't know how long that is. So it's important to do an analysis as to, is it better for me to take it now at 62, or should I take it when I'm full retirement age, or should I wait to where it's maxed out? Okay. Another thing too is oftentimes small business owners are startled when we actually go to the government site and find out what they have for Social Security coming, because so many years they didn't do like their corporate counterparts did.
Yeah.
They were paying what's called self-employment tax all this time.
Right. Yeah. Yeah.
Or maybe when they incorporate and they start paying themselves a salary, they made their salary so low that the money going into their Social Security is under what their peers that make the same amount of money over their working lifetime had in the pool. And so there's a lot of things to take in consideration. Now, sometimes you look at those things and you can spend a lot of time crying over spilled milk, okay?
Yeah.
But the key is, how do we make this up? And there are some things to do. We talked about one earlier with strategy, with the cash balance plan, pensions and things like that. But I think it's important before you make the decision to get analysis done by a financial advisor and with the software and everything to see when is the best time to take it, okay? Now, let's say they're in their early 50s and we got some time, they're in their early 50s and we got some time to 12 years, let's say, to make it up. Maybe we work with your CPA and your financial advisor and we come, okay, what would make more sense? How much did you pay yourself in salary so that we can get your data up so your Social Security number, your Social Security benefits will be more robust, okay?
Yeah.
So
exactly what I'm talking about is business owners, when your business makes money, you can expense it through wages to pay yourself, or you can just take distributions, and there are implications for that, even into how much you can get for Social Security. But I've noticed also that people, when they're in their teams get older, sometimes they have similar incentives. They say, hey, I don't want a salary anymore. Like, I've already capped out. I've met some really old teams where they're like, our employees don't want to get paid a lot because it affects how much they can draw for unemployment or Social Security stuff. It's really interesting how when people go through these stages, they themselves and their teams, their motivations change for how they'd like to be compensated and what their incentives are.
Right. But right back to something you said about benefits.
Yeah.
What if you have one of those older teams and you have the financial advisor come in and do a workshop specifically on that?
Yeah.
You run some different scenarios and then say, listen, this is my guy. I'm offering him to you at no cost to you to do this little analysis for you, so you see what's in your best interest for your next best step. And that's you have to pay a lot of money to go to a financial advisor to get that done, maybe, right? Yeah. Where if your employer is providing that, now you're going to retain that talent.
Well, I love that. Let me start to give you some plugs here. I'm going to share one of your websites. I know you've got a couple of them, so let me bring on the screen here. Here's, I think where we can, yeah. I think that we can see your website here. Look at this good-looking guy. So, this is charlesccalloway.com, so people can go here, correct, and understand. They can go to getbetterwithyourmoney.com as well.
Yeah, so getbetterwithyourmoney.com. It goes to the same place, and we have this set up because we have a really cool video there. It's like just shy of 3 minutes, and it's kind of a teaser for a more elaborate 18-minute motion graphic video that talks about the 7 steps to having a clear financial vision. And it's kind of an introduction and just to give you an idea of some of the things that we teach and we coach our clients on. And then also they could go there and they can schedule maybe a 15-minute phone conversation with me or set up an appointment. Yeah. So
here's where they can schedule a call with you. And then at the very bottom here, if they click on this Facebook, there's all your different things. And by the way, I do video, and Charles has an incredible YouTube channel as well. So check out his YouTube channel, but don't forget to click on this Facebook link, because you understand you've got a private Facebook group as well. Tell me more about what you do at Get Better With Your Money on Facebook.
So it's a private group, and that, as I said, is by invitation only. But if you click on that link, we can see you want to be part of the group, and then we let you in. We just don't let everyone in because we need to have a clear understanding of who's in the group. So we're speaking to their needs specifically, and that sort of thing. It's just a lot of different rules as it relates to that. But what we do, like right now, what we're doing, the last couple of weeks, we've been dealing with the obstacles to investing wisely. I don't know if you know this, Neal, but studies have been done, that the average investor is only getting about, maybe a half to 75% of what's available in terms of rate of return on average in the market, as defined by the Standard & Poor's 500. And the question all the experts are asking is why? And it all has to do with investor behavior.
Wow.
They're doing the wrong things at the wrong times. They're buying high and they're selling low. You say, why would anyone do that? Well, we've been talking about some of the biases that inform our decisions sometimes. Sometimes the emotional side of our brain takes over, our logical side. And so we're talking about that. That's what we've been doing the last couple of weeks. And that's been fun. And
that's what we're fun.
Yeah.
Well, check out those resources and get in touch with Charles for your specific situation. I say the same thing in my video. If you have a question about business in general, share it in the comments below. If you have a specific question about your business and it's confidential, then direct message me. I'd love to chat with you about that. But confidentiality is a big part of business brokerage. But either way, whether it's financial or something about a deal, reach out to somebody who specializes in this. We are advisors, and we are very focused on this part of something larger. And if you can use our help, reach out to us. You don't have to do it alone. So that would be my kind of takeaway message. There's people are at different stages of their financial journey, their business journey, and there's people out there like us to help out. Okay. Well, we're kind of coming to a close here, Charles. Anything you want to leave the folks that have invested probably 20-something minutes with us? Any takeaways at this point?
Well, Neal, I want to just just compound on what you're saying. You want to put a team of advisors around you, and I think that includes a good, competent CPA that's forward-thinking, okay, that not just tracks the numbers but looks forward. A good attorney that can translate. Because if you don't know your rights, they're not going to, okay. You need to have the attorneys that kind of help you ferret through all the complexities of that. But if you have a good team, financial advisor or broker that helps you with your business, and you put those people around you, now you're going to make wiser choices because you're better informed.
I couldn't have said it better myself. The wise words to go out on. Thank you for joining me on this program today, Charles. Really enjoyed the conversation. For those of you watching at home, reach out to Charles, reach out to me. That's all I got for you today. On behalf of Charles, this is Neal Isaacs, the Raleigh Business Broker. Thank you for watching today.